Hello, good afternoon or evening, depending on your location. Thank you very much for taking some time to join us today. I know there's a lot of competing presentations and Zoom meetings these days, and appreciate that you're spending a little time with us. We're going to try to be about 30 to 40 minutes on a presentation, and then we're going to open this up for Q&A, and you'll have the ability to ask questions along the way through the site here. Really quickly, my name's Rich Ford. I'm one of the co-founders of Roofstock. We did a webinar approximately 4 weeks ago when we were all first starting to work from home. My hair is a little longer. I'm still in the same location I was 4 weeks ago, but we have a lot more information. We put out a piece about COVID-19 and the impacts on the single-family rental sector, and a lot has happened in those 4 weeks. There's still a lot that's going to be played out, but we thought we would share some of those observations with you all. Not lots of huge conclusions to draw at this point, but I think some trends and some interesting analysis that everyone can take into account. Additionally, we're going to spend a little bit of time talking about a new product that we launched called Roofstock Reserve that we think is an ideal product to launch in this current environment. So with that, I'll introduce myself and Zach Ali, who's going to be presenting with me. For those of you that don't know my background, I did spend a lot of time in the single family rental space before we founded Roofstock. I did 20 years in investment banking, and the last part of that career was focused on the institutional capital coming into the sector post the last financial crisis, and was able to see a lot that happened then. Last presentation, we drew some parallels to then and now, which actually are quite different. And now actually we have the benefit of having some large institutional players in the space that have real data that we could draw upon for some of the analysis that we've presented here. Additionally, I think that we'll end up being in a spot over time to bring more and more of the tools that those players use to our site for use for underwriting and evaluating properties. We think we've done a lot of that so far. And with me is Zach Ali, who has also been in the space for a very long time. He worked at one of the largest owner-operators in the space, second or third largest player now, but has been with us for 3 years and been helping develop a lot of these tools that Roofstock is bringing to the table. He currently is a director in asset management, but does a lot of the strategic initiatives, and he is the leader of the Roofstock Reserve product that we're going to launch today. Zach, you want to move ahead? Thanks.
Yep.
Just really quickly, I think a lot of you know of Roofstock, but just as a quick background, we're a technology backed platform. I mean, we really were put together to allow people to transact in the single family rental space, leaving the tenant in place for the most part, and being able to do that remotely. And so in today's environment, it's a very interesting time to be able to have that functionality, and we're proud of what we've built so far, still have a way to go. One of the things that our goals has always been to make real estate investing, stock market simple, and I think I said this last webinar, hopefully without all the stock market volatility that we're seeing currently, because I know that's a little unnerving for some. So we'll quickly go through, well, not quickly, we'll go through a COVID-19 update, several slides, and then we'll talk about the Reserve product and open this up for Q&A. And as I said, you could send questions along the way, and we'll address them all at the end. So the first thing I wanted to hit on is we've had the ability to go around and talk with a lot of the larger investors in the space. Some of them are public and have actually put out filings. Other ones we have relationships with and have been able to discuss both the performance of their current portfolios as well. We own a property management company called Street Lane, so we've been able to assess our performance. And this was not inconsistent with what we reported about a month ago, but it's continued to be be strong. Leasing and occupancy across the board, across the markets at different price points are at very high levels. Most companies are saying their occupancy is as high as it's ever been, mid to high 90s, and that the leasing volume has continued to be very strong throughout this lockdown period. I think there's a couple of factors at play here. One is I don't think people are moving out of single family rental homes. The folks that are in place are quite happy that they're in a single family rental home. If they were going to move out to purchase a home or do something different, I think they've delayed that decision. And then on the flip side, I think folks that aren't in single family rental homes that maybe, doubled up or in apartments or what have you, this is a great place to be, during this quarantine time. And so I think the combination of those things have, created a lot of leasing activity and high occupancy. In addition, the technology has helped aid in this. A lot of the institutional players, but even some of the smaller retail players, have all sorts of self-showing processes where people can get a code and get access to a home and go and tour it by themselves. And so I think that has aided in this result. I think the more important question that was definitely top of people's minds 4 weeks ago was what is happening to rent collection. Are people making payments? Are we going to see a massive impact from all of the unemployment that has occurred? And it is big across the industry. And while we're not going to draw any predictions to the future, collections for April and May so far, from all the data that we've been collected, have been surprisingly strong. And I think there's a couple of public companies that Invitation Homes, American Homes for Rent, that have published this data, so folks can see that specifically. But even in our conversations across the board and talking with many of the owner operators in the space, the theme seems very consistent that they're being proactive and making sure that they're on top of communications with their tenants or residents, but at the same time, have been pleasantly surprised that the collection levels have been, very consistent with past history. And so the big question is that going to continue? I think it's highly evident that to date, the government stimulus has been very helpful on this front. April may have been savings, and people had, a lot of people were still working. In May, I do think that some of the stimulus, particularly, the stimulus checks that were sent out and some of the additional unemployment payments that have been made have definitely been helping. And so, there still is a big question mark hanging out. What does this mean going forward? Is this just a sector that seems to be much more insular than others? Or, is the stimulus really helping, and that may not persist into the future? Obviously, there's a balancing act between, providing stimulus and getting the economy back and going. And so I think we're still going to watch this data as closely as ever. But to date, it has been better than our expectations. So what is happening in the marketplace? On the institutional side, there's definitely been an impact on some of the larger transactions. We're involved in many of those. And for the most part, most groups that were in the process of buying a large portfolio of single family rental homes or selling one have at least paused the specific transactions they're working on. And that's a couple of factors at play. One is the financing environment for some of the larger institutions. It has been choppy. A lot of the largest banks have been very distracted with their credit committees and such, focusing on all sorts of other areas and sectors, and it's a hard time to get new financing in place. So that's definitely a factor. Another one is the ability to perform diligence on a large portfolio in this environment. And you can imagine, the complications with that. There was a very large transaction that was set to close in the sector, a public company called Front Yard. This is all public information, ticker symbol RESI, and they were being purchased by a large private group called Amherst, and that deal was scuttled. And one of the reasons for that in the press release is that it was just too complicated during this period to push two companies like that together with all of the interaction and requirement that would take. So, that's obviously been something people have been watching, and I would say for the most part, large transactions are getting postponed. And there is definitely a bunch of investors that are trying to see if there will be changes in rental payment history going forward. But I think almost everybody feels like the sector is going to be well performing in the medium to long run, because it is really one of the real estate groups that is not impacted by COVID-19, in that people want to be in homes versus shared spaces at this point. I'll also say on the retail side, on our site, we've actually our offer activity is decent. We were expecting that we may have some drop off in both the activity as well as the price with which transactions are trading at. I'm sure there's testing of the waters going on with what levels will clear. But the levels that are clearing, seem to be pretty consistent to date with the discount that may have been, list to sell that may have taken place or that took place in the past. So, still more to be seen there, but I do think that people, are still feeling that this is a very good asset class for the long run, and we're probably not going to see too much dislocation in prices in the in the near term here, but we'll have to see how everything plays out. There's been a lot of news coverage. There's a big article in the Wall Street Journal recently, I think just a day or two ago, that talked about the single family rental home industry, and again, feeling like it's going to be it's an area that is weathering the storm, very well. Obviously a couple of large publics had put out earnings releases, and I think they were drafting onto that. There has been, a lot of discussion about regular way home sales to owner occupants, and there was definitely a drop off in activity when COVID-19 first hit. But some of the recent reports have been that has actually ticked up decently in the last several weeks. I know tangentially that a few folks that are putting offers in to purchase a house themselves and really don't seem intimidated by the environment in any way. They just want to be in a home. And I think that's the general theme here, is that people want to be in homes, whether they're renters or owners, and that's probably a very good long-term trend for the industry. We have a data science team, and we decided we'd start trying to get ahead of things and look at different markets and what impacts may be. To date, we did not get a lot of differing information when we went around and talked to folks that had large portfolios across multiple markets or across price points, whether they're low rented or high rent homes. The occupancy trends, the payment trends seem to be fairly consistent. I think that could change over time. I think the stimulus dollars were going out, and there's still uncertainty as to where impacts will be felt the most. So one of the things that we did was we took a look at some of the industries that we felt might be most affected by the job losses, and looked at those as a percentage of the overall jobs in those economies, and produced a map that goes across several of the markets that Roofstock in particular is very active in, and a lot of the institutional investors and retail investors are as well. Want to be careful to draw too many conclusions from this. Obviously, Las Vegas pops up, huge entertainment destination, resort, restaurant city, and so on the one hand, you could say, well, geez, that could be a place that is very impacted by COVID-19. On the other hand, I'll say that pre this crisis, Las Vegas is one of the markets that investors wanted to be in. We closed a large transaction in that market end of last year, and there is a lot of institutional and other dollars that like that market and want to be in that market. So I think we're going to have to be careful on what trends we're going to draw, because there are both new buyers and existing players that have different levels of presence and appetite for different markets, whether they're already in a market or not. I've had some calls this week with 1031 investors. These are folks that want to transfer their tax basis from multifamily or other asset classes into single family rental. So some trends like that could affect the demand supply characteristics. So again, want to be a little careful. We're going to do more work here, but we do think that this is something that is worth spending some time seeing how different cities and markets and submarkets will be affected on the job front. Unemployment claims. This is a scary chart. It's across the board. There's nobody that hasn't been affected by COVID-19. I do want to again draw a little bit of caution, even though this is information that was pulled from third-party source. I have heard things like certain states have been more aggressive at processing claims in other states, and consequently in a period when things change week by week, we may have some overstating or understating of numbers in certain states. But I think the key takeaway here is there isn't a market that is unaffected by the unemployment claims. This is, many of you may have heard that there has been a moratorium or a barring of evictions, or partial barring, in most all states. And so the orange states here, you are not allowed to evict. There's the purple states or light purple states are states that have some partial eviction legislation, and then the white states do not. But as you can see, there's very, very few white states. And I think for the most part, almost everybody I've talked to is being incredibly accommodating and careful at this point. There's a lot of government stimulus going out. There's obviously a lot of people affected. And so I think for the most part, people are trying to keep people in the homes. And where there has been some payment problems, there's plans that have been going in place with certain companies to try to help people get through that. And again, like I said, to date, the stimulus has been working, relatively well. But this is a pretty big statement. Almost nationally, there is an inability to evict through non-payment, at least for the foreseeable future. There are some hard date ending points in the middle of summer on some of this, but there's an expectation that a lot of that will get extended if necessary. This is also an interesting chart. You'll see these are the states that are reopening, and the green states are reopening now. There's partial reopens in the orange states, and then some of the red states is a still wait and see process. Again, different states vary in how they define this, so a little bit of judgment here. But definitely some trends to see as to which areas of the country are opening up quicker than other areas. I do think we have to be a little cautious, as owners and investors, to draw too much from this. There's been countries that have opened up and then pulled back, and I think there's a high probability that we could have that sort of scenario develop as well. And I also think some states may be very careful about how they stage the openings. But interesting to provide this data, so we thought we would share that. This is a complicated, busy chart. What it is basically is the amount of stimulus that is going into the economy, and it is huge. It's unprecedented. It's almost 3 trillion, and I think there's definitely a lot more to come. A couple of interesting observations to put it into perspective. With the TARP financing that occurred post the last financial crisis, I think 700 billion was passed, and I think 450 or so was actually funded, primarily to banks and a few insurance type companies. But that money went out in the form of debt and equity, and a lot of it was repaid. There was a big multiplier effect. Those banks were levered, so you could really see a lot of dollars going into the economy. It was much, much more complicated to do that this go around. I'm frankly, hugely impressed with the amount of capital and the speed with which it has come into the market. The areas that really are affecting single family rental are on the top left, and it's really the tenants that are being helped more than the landlord. Now, thankfully, that tenant stimulus is finding its way to the owners, which is great. But it's really through the stimulus checks and the unemployment checks that are, that are really finding their way. There are a couple of things going on. We've been working on some information out here in California, and just this morning there was an announcement that there may be some funds that are going to be made available through tax credits or otherwise to potentially some of the landlords that may be caught in the middle of this that could be affected. But to date, there's been a ton of capital put out there, and it feels like, based on the rental payments that we've seen, that it's been decently effective in the single family rental space. This is a chart that our data science team put together to look at areas where a large percentage of folks' income goes to paying rent. And not surprising on some of the coast, and we all know in California here where I live, that a huge percentage of people's income goes to housing in general, whether you own a house or whether you rent a house or an apartment. And similarly on the East Coast. But what is interesting is there are other pockets. There are some areas in the Midwest that you can see that do show up. This map is obviously, on the MSA level and pretty granular, so it's hard to blow it up on the screen here. But we do think this is something to watch. Now, we have to be a little careful because there's still, there's different distributions within those areas. So you got to be a little careful on the conclusions you draw. But this was interesting to us, particularly as we overlaid it with the next map. And I would have liked to show these side by side, but it's hard to see on a screen. So if you could go to the next map and try to memorize this one. This is the percentage of households, eligible for stimulus payments. And, we had to draw some conclusions. We cut it at 150,000, assuming the $75,000 threshold, two-person household incomes. But you could also see that, those same states and areas in the country that have the highest percentage of income going to pay rent or for housing are also some of the places that are not collecting as much of the stimulus as other areas. So that's definitely something we want to watch. Again, we need to get down to a more granular level to draw real conclusions from it. I would also argue that some of the areas, have more robust economies and have places where people can reinvent themselves quicker, and I could see jobs coming back quicker. But it is something that we thought was interesting to present as we start looking across the country. Yeah, and with that, wanted to basically introduce the reserve and then hand this over to Zach. We've been sitting hard thinking about what are the types of things that make sense to invest in this environment. Lots of people love the single family rental investment class. Folks are trying to figure out when and what type of investments to make. I've shared on a podcast I did recently that, my stomach's been turning with the equity markets, but I have been investing some capital into the equity markets. But I've been investing in very large cap, strong dividend paying firms that I view as lower risk with a, fortress type balance sheet. And so, it's interesting when we look at, the single family rental sector, I think you could sort of take a similar type analogy that, there may be some really great investment opportunities. There may be a situation where somebody could pick up, a house at a really good price and do a good renovation and get a great tenant in there and really hit the cover off the ball. And definitely, there's people that have that risk reward appetite. But our sense was that there's probably a lot of people that would like to make investments in, higher quality homes located in good areas that they feel will be a, great investment, particularly for the longer run. And so, what we ended up doing was we have homes that we have curated, in many cases have actually owned these homes that we've purchased through portfolio transactions or otherwise, that were on our balance sheet, that we were looking to put into the marketplace and through different avenues. And there are a number of these homes that we think are high quality. And Zach and team put together a program called Roofstock Reserve, and he's going to walk through that. And again, I think I'm not sitting here trying to push this product. The goal is to really, provide an update on COVID-19, but at the same time, to let people know that there are assets, on our site, as well as the reserve product, that may be better for this type of environment than in other environments. But again, I think everybody needs to evaluate their own, risk tolerance levels and appetite for different types of investments. So, Zach, with just, I guess, in summary, I'll let you go through the details, but the product that we've come up with, the goal is to have a nice balance of ongoing cash flow and long-term price appreciation, and homes that are we view of strong quality. And so I'll let you elaborate on the details of the program, and then what we'll do at the end is open this back up for questions. And again, they can be we can be discussing other impacts of COVID-19 or Roofstock Reserve or anything in between. Great. So with that, Zach, you want to take over?
Yeah, of course. As you alluded to in a few instances during the update, the single-family rental sector has shown some resilience through these uncertain times. But the reality is, no one has a crystal ball. No one really knows what the future holds. But the idea behind the Roofstock Reserve product itself was to help empower investors control some of the outcomes of their investments through the quality and the attributes of the asset itself. So these homes were purchased by Roofstock, and there were qualifications to enter the program, including minimum neighborhood scores, so a 3+, which I'll get into a little bit later, and choosing newer homes, which can have positive impacts on the future cash flow and the marketability of the home to renters. As part of the package as well, we are offering a 1-year home warranty, as well as the Roofstock guarantee. Without going into too many details of those programs, you'll be able to get more detail on the Roofstock page that outlines the Roofstock Reserve product, and we'll put that in the chat so you have the direct link at the end of the presentation here. But going through some of the attributes of the program itself, including our neighborhood ratings, the new builds I mentioned, as well as I'll go into some of the resident standards for these properties. So first being the strong neighborhood ratings we're putting into the program. The neighborhood rating is a Roofstock proprietary tool that helps us synthesize a lot of local attributes into a single variable that's digestible for an investor to help compare properties across the platform. So some of the inputs of the Roofstock neighborhood ratings includes household income levels, employment levels, income levels, as I mentioned. We have crime ratings in there as well, and we actually weight the crime rating based on the potential impact to single-family residential real estate. And this is a scale of 1 to 5, and I'll go through the end of where you can find these on our individual properties. But in order to enter the Roofstock Reserve program, we have a minimum threshold of 3 or higher. So really putting the highest neighborhood scores into one offering. In addition to the neighborhood scores, we're also putting in newer builds or recently upgraded homes. Right now, you'll see as you go through the Roofstock Reserve properties, there's a 1990 plus newer vintage. In most cases, it'll be around 2000s, late 90s, and we'll have some newer builds in there as well. The benefits of the newer home are twofold. In addition to, the renter's perspective, sometimes new homes are attractive. And additionally, newer homes can help potentially lower the initial maintenance required If you're looking at a 1990 home versus a 1940 home, just the numbers, there's probably a little less wear and tear in the newer builds. So that's another requirement for the Roofstock Reserve product itself. And then in addition to the asset itself, in each of the cases of the residents in the properties, there's minimum thresholds to qualify for the product. And in addition to that, we're putting homes that have paid for the most recent month's rent. So the properties in the product currently have all paid the May rent, and you can see that in the diligence vault that I'll outline a little bit later in the presentation. So going through the properties we currently have in the offering, we'll launch a pilot with 5 homes in the Augusta market. 2 of the properties are currently sale pending, but the 3 are still there, and it's identified which properties are sale pending on the Roofstock Reserve page. But a little background about Augusta. It's a second largest MSA in Georgia, only 2.5-hour drive from Atlanta itself, with a population of over 600,000 and a pretty large service member population. And then also with Augusta, it's hard to talk about the market without discussing the Masters, which attracts over 250,000 spectators each year. So the properties themselves, again, we'll put that in the chat, how you can find the reserve properties, to direct link to the page there. But within each of the properties, in addition to be able to scroll through some of the photos, as I mentioned before, we have information on the neighborhoods. Again, 3+ neighborhood scores out of a scale from 1 to 5, as well as the school scores are available in each of the property cards, as well as a link to learn more about the reserve property itself. Also, as I mentioned previously, we're including properties that have paid May rent, and you'll see that evidence through the resident ledgers that we put for each property in the program, as well as a property valuation report. So each listing has the details for the respective properties, and we'll also include a number to help book some time with our experienced account executives. If there's any more questions, property specific, they'll be able to help answer those questions as well. So I know we wanted to leave some time open for the Q&A. I think maybe it might be best to help move to the Q&A now, and I can then help answer any questions specific to the reserve product, or as well any questions for Rich on the COVID-19 update.
Great. Hey, Zach, I'm seeing a question in the Q&A with regards to inspections. The fact that the reserve has inspection contingencies, and asking if that means it hasn't been inspected or not. Do you want to address that?
Yeah, sure. So while we own the properties, we have a good handle on the condition of the properties themselves. But given the COVID-19 situation and the timing of the launch, we obviously want to be respectful of all the residents and the shelter-in-place orders. So we have put inspection contingencies on these properties, and every investor will be able to receive a full inspection. As we saw in the earlier slides, Georgia, one of the markets opening up and now able to help move in to help go and inspect some of these homes. So before closing each of these homes, we'll have the inspection report our investors are accustomed to seeing. But given the situation with the shelter in place, that were clearly unique times, we did not have those available at the launch.
So people are going to have a chance to go and inspect them, even though we've had folks in there recently. Zach, another question is around markets and Georgia unemployment and other things. Just why we chose Augusta as a place to launch. What other markets might we be interested in, or what might be added to the reserve in the future? Do you want to address it? I can jump into.
Yeah, sure. High level, we're a pretty dynamic platform where we can enter new markets. We want to make sure we understand the fundamentals of the market before we put the reserve products those markets into the reserve product. But again, the reserve product itself definitely heavily focused on the asset itself, the local neighborhood scores, the vintages, and then new markets will open up as a result as we expand the program.
Yeah, I mean, I'll add a little bit to that. I know that particularly with regards to the Augusta market, there was an opportunity to purchase a very high quality portfolio in that market with really strong school scores and in pockets and neighborhoods that worked really well for this. And I do think that it's not that we're going to be looking at things on a state by state basis and that this state we think is going to operate better than that state. I think it's really going to be looking for those opportunities, within markets, sub-markets, neighborhoods. One of the reasons our, data science team built the neighborhood scoring, looking at school scores and all the other statistics that we think work well. And as Zach said, some hyper attention to the ledger right now as well.
Great. And then, Rich, I saw a couple questions that alluded to, how this product fits into similar products we have on our platform, like Roofstock One. Do you want to speak a little bit to this product and the differences or similarities between this and Roofstock One?
Yeah, for those not familiar, Roofstock One's a product where the assets are quite similar. We were able to basically create a structure where people could go and own 1/10 of a home, and so we would basically hold title, and we used a trust structure such that we could then sell basically what were securities in that home, so people could own 1/10 of an interest. A super exciting product. We ran a beta on it last year, went extremely well. Look for more of that to come in the future. One of the limitations of that product, though, currently is that it's only available because it is a security for accredited investors, and so and it comes in the form of being able to buy shares. You could also obviously buy more than one share. So one of the goals in launching this product was to make sure that we had a product that was available to everyone, whether you're accredited or you're non-accredited. A lot of folks do want to own the whole home and be able to time their exit and finance it the way they would like to. So there is some real similarities in that the Roofstock One products were highly vetted. The homes were highly vetted by us and met all sorts of criteria that made us feel good about putting them up. So that is consistent, but this product is differentiated in that it is one where the title and the ownership goes to an individual owner who can lever it at the rate that they would like and time the exit when they would like.
Great. One of the other questions on the Roofstock Reserve product was around the property management. For these reserve properties, we partner with our preferred property managers who will be managing the assets. And in some cases, for example, the Augusta properties, there is our preferred property manager who has managed these properties. So there's an opportunity to continue to use our preferred property managers through the Roofstock Reserve program.
Hey, Zach, I see a question here on cap rates. And do you want to address that? The question is, what does the typical cap rate for Roofstock Reserve properties look like?
Yeah, sure. I think it's hard to pinpoint an expected cap rate for the program specifically, but I would say as you're evaluating properties across the platform, these might be in line with the higher neighborhood score cap rates. So mid, somewhere around the 5s, the low 6s. Is the initial part of the launch year, but again, that's correlated with the property type and the cash flow yield profile of these properties, given the newer vintages, higher neighborhood scores. So there's going to be a range, but it'll be correlated, to the neighborhood score and the vintage of the property.
Yeah, maybe to elaborate on that and kind of combine the last two questions, on the site, we've also got properties that are tagged turnkey. These are properties provided by lots of different types of sellers out there where they have very low deferred maintenance. They're coming in a turnkey way that people can jump into them. They're good properties, but they probably have a wider range of yields and and neighborhoods, etc. So in the turnkey product, there may be properties where people who have are searching for higher yield but willing to take on a more varied outcome with regards to returns and such, are comfortable with a lower neighborhood score and a lower school score. And then on the flip side, there's also properties within that spectrum, that are much more closer to the Roofstock Reserve properties that may have a moderate yield, but a lot, a newer vintage, better neighborhood scores, higher quality overall. So that's another comparison.
Yep. Let's see.
So I know that a question that I had earlier on when I was going through the COVID-19 piece is, what additional information will we be putting out? More reports? We did a report a month ago, and what does the future look like? What we tried to do in the first report that we put out was really started off with a big comparison versus the environment we were in or expected to be in versus the environment that we were in post the last financial crisis. We did do some work in between on some of the stimulus and the ownership. This report, we just started opening the door a little bit on what some of the differentiating factors may be as we move forward and what is happening overall in the space. I do expect that we are going to stay on top of this. We're not going to be putting something out every week. But we will be, sharing information and insights that we have, most likely on a monthly basis or so.
Great. I think there was a few questions on the cost of the reserve product itself, and relative to the marketplace. There's no additional fees you're paying on top of the standard fees on the Roofstock website. So to help answer that question, there's nothing additional that you would see with these properties relative to the other properties in our marketplace.
Yeah, Zach, I know that Roofstock 1 is a sort of a set price, same, investors all coming in at the same level on a home. You want to elaborate a little bit on the way that people are making offers on Roofstock Reserve? And then the other question is more properties. Obviously, you've just launched with a handful of properties. It looks like 2 are already under contract before we even had this. So, could you give some people some insights into when more properties might be showing up on the reserve, et cetera?
Yeah, sure. To answer the first part of your question, Rich, there's no sort of single price you have to purchase these homes at. It's more of a traditional bid-ask arrangement where you submit an offer, whether it's at list or below or wherever it might be. There'll be a response and you negotiate on the pricing. For transparency, we have our valuation reports inside the diligence vault as well. So each potential investor will have access to that information at their fingertips. So to help answer the second question in regards to when will we see more inventory, right now we went with the launch with the current 4 properties, and we're adding another one here. It's probably already on there actually. We're going to continue to put properties on the reserve side. First, probably a few more Augusta properties. We have some other properties in the Atlanta area. And as you mentioned earlier, as we're exploring new markets, that'll also help us add more potential inventory. So right now we have our current set of properties, but we'll continue to add on as the product evolves.
Great. And I see a question here on financing. One of the advantages of this product offering is that we can take the time ahead to evaluate financing options. As folks know on our site, we do have different financing partners and people select a property, but generally when they're going to that financing partner, it's after they've selected the property and then they're evaluating what sort of debt they can put on the property. One of the things that we are starting to do some work on, we wanted to get, Zach wanted to get this product launched, but we have started working with a couple of lenders and shared with them the information on the homes so that they could be front and center with providing different financing options. And so Zach, I don't know if you want to elaborate on that. At some point, I think you're expecting to have terms or term sheets up associated with these homes so folks can see if they could put 75% financing on, here's what it would look like, or 80, 85%, the different, different levels. I don't know if you want to elaborate on what's to come there or how people might think through that currently.
Yeah, sure. So we're actively in discussions with potential lenders, currently on each of the listings, and we're able to connect potential buyers to potential financing partners, and we're constantly looking in the for other potential lenders for these properties as well. Again, we have our traditional lenders on our platform that we've had on other properties, and we're constantly looking for new lenders as well for these properties. But right now, you're also obviously open to bringing in your own financing as well.
Great. Maybe we'll just do a couple more here and wrap things up. Zach, one other question was just, again, like sort of a comparison to the reserve properties versus some of the better higher school score, neighborhood score properties that are on our site just in general and other markets, and how somebody might look at one opportunity versus the other, or what specifically the reserve properties, how you would look at differentiating them. And I'll just start with saying that people should look at all. Our goal as a marketplace is to provide people with choices, and different investors are going to have different appetites for different markets, for different price points, for different risk rewards. And so, definitely think people should be looking across the platform. Obviously, you have to launch somewhere, so we're not launching reserve in all the markets across all of our platform and that, but we are trying to bring more of one option for investors in this current environment. So I don't know if you want to elaborate a little bit, Zach, about the curation and underwriting and such.
Yeah, I'd echo the similar sentiments. We encourage investors to look across the platform. The idea behind the reserve product was really us, transferring our knowledge and acquiring these properties, having managed them, and being able to put properties up that we, have an understanding that they fit the criteria and are confident that these will make good investment properties for our buyers.
So I see two more questions. I see a question on the money back guarantee, 30-day money back guarantee, Zach, as well, or as well, why don't you start with that?
Yeah, so we're offering these properties with the Roofstock 30-day money back guarantee. So again, you can find those details as part of the reserve page, which everyone should have access to in the chat as well, and in the presentation. In this case, the Roofstock money back guarantee, if there's buyer unsatisfaction 30 days starting after the close, Roofstock is willing to take the property, list it back in our marketplace for free And at the end of that period, Roofstock will also, the 90-day period after listing, Roofstock would purchase the property from the seller. Not sure if you had any more details that you want to elaborate there, Rich, but it's similar to the Roofstock money back guarantee across the platform.
Yeah, I mean, particularly, on these properties, we've currently owned them. Quite happy to continue to own them. We obviously want to stand behind that guarantee as we do, on the rest of our site. And then, there's more questions, Zach. So,
yeah, taking a look here.
Yeah, we'll hit some of these one-off because they're very specific on properties people have and agents and other things. So we'll after this try to respond in the chat box to several of the very specific questions. Zach, did you want to just wrap up and let people know if they're interested in this product, where to go and what to do. And I'll wrap by saying we're continuing to want to be transparent and give people as much information on the sector as possible. So come to our site and search for that, and we'll be proactive in getting messaging out to the community of investors here, and taking what we're able to glean from all of our connectivity in the sector, and provide some opinions.
Yeah, great. Thanks, Rich. And again, if there are questions that we didn't get to, or as questions come up, our account executive team is happy to facilitate those questions as well. But in all, we're looking forward to feedback from the program as well. So as people have an opportunity to go through the properties and go through the program, in addition to questions or recommendations, we're willing and excited to hear that feedback as well.
Okay, great. Well, with that, we'll wrap to keep this within an hour, and look forward to speaking with folks soon. And again, thank you very much for spending a little bit of your afternoon or evening with us. I appreciate everyone has a lot to do, and I look forward to hopefully continuing the dialogue. Thank you.
Hey, sorry, Rich, one more thing. Just want to make sure people did see the links to the program in the chat box. And there's also a reserve@roofstock.com email that people can send their questions into.
Great, and I think this is being recorded. That was a question, right? So people could listen to this later if they'd like.
Correct.
Great. Thanks again, everyone.